How's it going, peeps? Welcome back to Viva La Coin. I am Joe. I will be your host for today's episode, and if you're anything like me, you probably feel like you need a fucking lobotomy after another late night Elon Musk tweet escapade. But ultimately, I'm not here to talk about that today because the market is going to react however it's going to in order to fulfill whatever accumulation pattern the big players and the whales and everyone else are executing. If you stare too long at the daily charts or look at, well, oh, here's what my TA says, someone's just gonna fucking pull the strings behind the scenes and fuck your whole day up. Whether it's they pump you up and you lose all your shorts, or they dump it and you lose all your longs, that doesn't matter. Stop looking at TA. At this point, we just want to understand where the fundamentals of everything is going and where does the true value lie, because that's where all this is going to reflect as things continue to pick up when they do. Now, like the title of this video suggests, a lot of, let's say, larger players, institutions, investors are starting to make the call that Ethereum may just flip Bitcoin in what is known as and has been called in the past the flippening, right? Where Ethereum takes the number one spot away from Bitcoin and not only has more utility due to DeFi, but then on top of that, with EIP 1559 coming up July 14th, it would then become deflationary in a sense as well, if that is executed correctly, making it more scarce and supposedly, according to most, a better store of value. So the question that everyone's asking is, if Elon Musk has an issue with Bitcoin, or these large institutions are all of a sudden finding their heart in all the ice melting off of it, they're worried about global warming and they care about the environment, which they don't, but if that's the narrative, are they going to turn to Ethereum and abandon Bitcoin in that store of value play along with everything else? And is Bitcoin at risk of losing that top spot and fading into irrelevancy over the course of the next couple of years because of all the new innovation in the market? So I'm going to look at a couple different things that I myself am taking into consideration with this whole question or explanation, but ultimately I'm open to any other opinions anyone has. Leave them down in the comments. I'm always happy to discuss, and ultimately I say, I'm not a financial advisor, I'm not an oracle, nor am I a fucking wizard. So do your own research on top of all of this. This is just meant to give a little bit of perspective, a little bit of education for people that are newer to the space, and to really help open up this space to others. So I'm open to any thoughts that you may have down below. But here's what I'm thinking. So we're just going to jump into it. I shouldn't be blocking anything on the screen if I make myself small enough here. So Bitcoin right now is sitting around 36.8, which is pretty piss poor considering how well we were doing earlier. I believe we were all the way up to right around like 39. Let me get off the minute chart. We were up to like 39K. And we were breaking out of what a lot of TA people were watching. There was a symmetrical triangle they were saying we were going to pop out of. But right at that point, Elon Musk tweeted something about Lincoln Park and breaking up with Bitcoin and all this other bullshit. Just another, noise event. But it's funny that it happened right as Bitcoin was breaking out of that pattern. And we were going to push towards 40, maybe 42K and continue that breakout. So ironically enough, I think the timing does line up with bigger events going on behind the scenes. I don't know who got into his ear or who's pulling the strings. There are certain YouTubers that have speculated it's BlackRock or some of the large investors, or maybe even some of the governments that help him, operate his companies. But I'm not going to sit here and throw my tinfoil hat on and tell you who it is. What I want to look at is Bitcoin at risk? If we do have that swing low that I mentioned in my previous videos, we tank all the way down to like 28K over the course of the next 3-4 days. And Ethereum continues to pump. Is Ethereum going to replace Bitcoin? Is Bitcoin at risk? So a couple things we want to take into account. So Bitcoin at its absolute height, although on CoinMarketCap it's going to show it's around 61,000, we were pushing right up around 64.5, right around that third week of April. And since then, we've been in a declining pattern. We've been in a downtrend in what some believe to be the beginning of an extended bear market. Now, I don't believe that it's an extended bear market, although my time machine is broken, so I can't go and check for you. But I still think that this is an accumulation phase on the back half of that pattern that a lot of other much smarter people than me pointed out in that Wyckoff distribution. Now, if we look at Bitcoin in general, in probably the most widely accepted way that we track it that has tended to be most accurate, that is the stock to flow model put together by Plan B. And he has pretty much nailed it the entire time. And we have had times where we've retraced under these averages where Bitcoin should be following based on the supply and demand and the happening. And I look all the way back to, let's say, like mid 2019, we were almost 50%, or early 2019, almost 50% below what the moving 365-day average was. So right now, we're considerably below that line, but the lower band of the stock to flow model and some of the other more, I guess, in-depth versions of it, we can go as low as around $30,000, $31,000, and we're still within this model without really breaking that structure. Ideally, as he said in his own words in a tweet, we don't want to stay there, right? We want to correct back up. But if we're going to have that manipulation, then we're going to keep pushing that lower band. But for right now, everything is still okay for the time being. So if we look at the overall whale wallets that hold a serious amount of Bitcoin, anywhere from 100 to 1,000 or 1,000 to 10,000, there is an analyst platform, Sentiment, but it's showing that Bitcoin millionaires began reaccumulating their positions. So it did go down for a bit up until towards the end of May, right around, I believe, the 21st after that dump on the 19th. And then they started reaccumulating, and it's pushing back up along with Bitcoin, even though it isn't reflecting it in the price. So they're still keeping their eye on it, but Ethereum has shown more strength. So if we talk about Ethereum, so the price is still sitting around $26.72, so $2,672. And this update, that EIP 1559 that I keep mentioning, comes up in July. And what that's going to do is essentially not only help the platform to scale a little bit transaction-wise and into they said originally it was going to cut back on the gas fees and the prices, although that won't really be too much of an effect there. One of the main things it's going to do is in the circulating supply. You can see Ethereum right now doesn't have a maximum supply. It only has a total supply. And since I even started this channel a couple months ago to try and help bring some of this information out, that total supply was 114 million and change. So we've already added about 2 million to this total that Ethereum has, which would continue to eat away at how high the price can go. Well, in EIP 1559, when you do transactions or utilize the Ethereum network as opposed to just paying out the fucking ass for Ethereum gas fees right now, it would actually burn some of the Ethereum in total. So it would lessen the amount of total Ethereum available every time some of that is burned. And it will counterbalance the amount of new Ethereum that's created, effectively making it as close to deflationary as possible. So a lot of people have begun to argue, well, if Ethereum will hold more value and it has all this utility in DeFi, can it really supplant Bitcoin and become that number one position and a store of value? So in this story, it was actually on Market Insider. They were talking about it just towards the end of May. This narrative started to come out. Ether has a high chance of eclipsing Bitcoin as crypto's dominant store of value, Goldman Sachs says. So Ether has a high chance of supplanting Bitcoin as the dominant digital store of value. The bank notes that Ethereum 2.0 is expected to increase transactions per second to 3,000 compared to just 7 for Bitcoin. As a cryptocurrency use in DeFi and NFTs becomes more widespread, Ether will build its own first mover advantage in applied crypto technology. So that is their mindset, and a lot of others feel the same way. So I didn't pull up 15 different articles of banks saying the same shit, but that's really what everyone is looking at. And they keep bringing it up here. Like Ethereum seems to be beating Bitcoin on many fronts. Bitcoin has seen major fluctuation in price, rose all the way to a high of 65K, only to fall 50% down to $30,000. And Ethereum grew 900% over the last year, where Bitcoin only saw a 275% jump, even though they're only factoring in that that's after the fall. So they go into all the declines in the user base and everything like that, but you get the point. So this was a conversation that took place back in 2017, where Ethereum got very, very close to passing Bitcoin. Actually, the closest ETH got to flipping Bitcoin was June 17, 2017. Bitcoin was just $8 billion larger than Ethereum. So, in this person poking a little bit of fun, but they said lately ETH fans have been celebrating their gains versus Bitcoin. The gap between the two has already shrunk to 720 billion. So, a little sarcasm there because that's still a massive amount of ground to cover. But this was back when Bitcoin was almost at its all-time high and Ethereum had fallen down back to around 2K. So, the egos are always on full display in cryptocurrency. But ultimately, Ethereum is catching up ground against Bitcoin because right now the the market cap is just shy of 700 billion for Bitcoin, and the market cap for Ethereum is getting close to about half. It's 310 billion. So if Ethereum starts to gain momentum, all it has to do is get back to around a $5,000 Ethereum, and we're about neck and neck. But here's where I think the complete difference between the two is and why I don't think that will happen. And again, I'm not saying that it won't. I'm just saying I don't think it will. Because as you have Ethereum adding all this utility and everyone talks about network effect, Ethereum 2.0 that everyone's referring to will not be completed officially until around estimates around like end of 2022, which with as slow as it's been happening, it could be early 2023. So Ethereum, in order to hold that store of value, would then have to take up enough market share in this space and maintain it to hold said value. If I look at Bitcoin and you were to ask me what cryptos compete with Bitcoin for store of value currently, and I'm not talking about some shit poster talking about like Litecoin as a store of value. Bitcoin does it better, doesn't have any real competitors like Ethereum is about to. No, in my opinion, Bitcoin has already won that store of value play. And even if it doesn't expand further or become a currency, which a lot of people contest is really not a function that it should serve, it should just serve as a store of value and replace gold, then it would still have that store of value hard cap that it doesn't have to compete for. With Ethereum, if it becomes a store of value, but it's also competing to remain relevant against every other layer one solution when it comes to their DeFi projects, their fees, their scalability, and their readiness to deploy those this year and over the next 5 years, then your store of value is not only going to be affected by Bitcoin going up and down and the market going up and down or a bear market or a halvening, but it's also going to be affected by the amount of competitors and innovation that they're coming out with as well. And we saw Ethereum take a hit just on a smaller scale with the Binance Smart Chain. When they came out with their Smart Chain and their DeFi plays, you saw a mass movement of money locked in DeFi that was on DeFi Pulse tracking Ethereum or ERC20 locked protocol TVL go over to the BSC or the Binance Smart Chain over on DeFi Station. So you can see that these projects are going to go where the money flows to and where it's easiest for people to utilize. Most people right now, we talk about Ethereum and all of its use case and on the DeFi, but the average person globally can't afford to use it. The fees are too high. And I get people's comeback of, well, Visa doesn't give a fuck about fees because they can send through a million transactions and pay the fee once, or it doesn't, like, they could just cram all the shit in. That's fine, but you still want every person holding Ethereum or utilizing the network or the DeFi protocols, or you want companies to not have massive overhead trying to calculate how much Ethereum fee they're going to have to spend over the next 2 years just in order to maybe get an early DeFi play in their own company's ecosystem. So let's look at everything else unfolding. You have Cardano, which a lot of people still contest. They don't have smart contracts, which, yes, I understand. They are coming though, and I mentioned that in my last video, but the first stage of Alonzo already rolled out, and that was Alonzo Blue. I believe it took place last night or the night before, so the test net and everything for the main net is already going live and successfully rolling. By the time around August, that purple phase that is fully rolled out, we will have smart contracts, but that chain, that layer one with Cardano, with ADA as its native token, they are already fully staked and ready to scale. The network is 100% staked. Ethereum isn't even close. And that's because most of the people that are staking their Ethereum, once you put it in, it's locked into the protocol. You cannot pull it out until Ethereum is 100% complete with ETH 2.0, at least at the moment. I know they're talking about making a couple changes or updates where you can, but right now you can't. Cardano, you can stake all day and remove it at any point you want and sell that asset. But 71% of all circulating Cardano is staked within the protocol already, which, although there's 45 billion total and 31 billion circulating, it has a hard max supply. So we're not going to have to go back and retroactively limit the amount of Cardano that could ever be produced. It's already produced. And most of that is locked up into staking and producing the blocks on the network. So that leaves, 10 billion worth of ADA, or maybe 12 billion out in circulating. But they're also, they have a partnership with Ethiopia to work with their Ministry of Education for millions of student IDs and validation programs. They have other country partnerships, one that is a communication-based one with Tanzania. They're going to be partnering with people and have smart contracts, which are all going to utilize the native token as well. So you're going to have a lot of competition against Ethereum. So although I don't believe that anything, or at least most things in crypto, are not a zero-sum game where, you can only have one definitive winner and everyone else has to lose. I don't think that that's how it should operate, and I don't think that's how it could operate. But when it comes to store of value, that's how you want it to operate. Or else you're going to have people competing for store of value against each other, and good luck trying to take the risk to put everything into, a DeFi play or a layer one solution that's competing against 5 others, and that's going to be your store of value play as well. I think Bitcoin is going to become something where store of value is the main utility of it. It doesn't have any other DeFi, and it doesn't have any direct competitors with the things that they do. In the event that they may have shortcomings, or maybe their smart contracts on Cardano don't work, or maybe Ethereum can't scale, or maybe a new player comes out and they take a big chunk of the market cap, or they do something different. All of those things would affect the store of value, in my opinion, regardless of just supply and demand. Now you have to factor in utility as well. And network effect works, but only if it's being used by everyone, which most people currently can't afford it. And also Cardano is rolling out an ERC20 converter, which you're going to be able to take your ERC20 tokens, your DeFi coins, whatever you hold in Ethereum, and you're going to be able to start converting that over to Cardano. And they already have a lot of projects that haven't been able to scale on Ethereum excited to go over to Cardano to operate there because they can't get people to utilize things on their system. I mean, when Ethereum was struggling to push past $2,000 throughout February up into around April, a lot of the DeFi plays on that, including a project like Aave, hit a massive roadblock because it was so expensive just to utilize its lending protocols, and they only started gaining ground whenever they jumped over and they started operating on Polygon Matic, which is a layer 2 solution on Ethereum. Then you water this down even more with another good competitor and or project that I like, which is Polkadot. Now, Polkadot isn't, I would say, is a direct competitor to Ethereum as Cardano is, but their parachains and their network and all the things that they have, guess what? Just like Ethereum, they're going to have a decentralized exchange. They're going to have their own wallets. They're going to have their own projects. They're going to have their own NFTs. Same with Cardano and same with Solana that I'm going to mention here in a second. So you can quickly see how unless Ethereum gets everything right and they do it first across the board and everyone can use it, you're going to start eating away into that store of value narrative, and it's going to weaken that case against Bitcoin. Now for Polkadot, they're rolling out their testnet for parachains, and it's about to go live officially, their mainnet. Through Kusama as well, which is their testnet where they go and they deploy these parachains before going live on their blockchain. Now, they're still getting massive funding from institutions. Cardano was as well. I didn't pull up a chart, but they had a lot of institutional money coming in during this dip as opposed to Bitcoin. Ethereum had a ton coming in too, and Polkadot is no different. So the Master Ventures Polkadot VC Fund is the first of its kind and will invest in the most promising projects on Polkadot and its canary network, Kusama, according to the announcement Wednesday. So Polkadot and Kusama plan to auction off 50 slots for second layer chains. And all these second layer chains are all the other cryptos that Ethereum has in their DeFi. And Polkadot's going to have all that same shit built on top of them. Just different protocol names, different companies, same thing with Cardano. So you're just stacking this up. So we believe that Polkadot will be one of the clear long-term winning blockchains and ecosystems due to its cross-chain functionality, ease of development and deployment, as well as strength of the development community. And I could go on and on about them, or even some of the other blockchains that are smaller that will have interoperability or cross-chain. It's all going to eat away at the ecosystem. The only other one that I'm looking at that I was investing in for a bit, I did take a fair amount of profits out when they were around $50, but that's Solana. And I mentioned them back in my altcoin preparation video. I think when I mentioned them then, they were around like $20, but they really had a good past couple months, and they were holding pretty strong up until this most recent dump. They were pushing towards actually $60. They were up to about 55 towards the end of May. And they're starting to have a bunch of different competitions and things go live on their system as well. And they're all about scalability, which has been a hindrance for Ethereum. And they're tracking their total transactions and everyone using the network. And they're trying to get as many people to develop and build on this system as possible. Now, I never did a specific individual video about them, but what I wanted to do was to see if I was going to play a video for you on them, but I'd probably just blow my speakers out because it doesn't adjust. But just to give you an idea, they have a ton of dApps essentially tying in or being built on their network, and they have a bunch of different larger projects and oracles and even like Terra Luna that, although at a rough month, they're still a massive player in this space and I think have a long way to go. Storage plays like Arweave, Chainlink is their oracle, and they have a bunch of new stuff coming. So all I'm trying to say, and I'm not saying run out and buy a bunch of Solana. In fact, I'm eyeing up, if we do get that swing low down to 28K, that's when I'm going to fucking jump in and buy more Solana and buy more Cardano and buy more Polkadot and honestly buy a fair amount of Ethereum, because I sold a big chunk of my Ethereum bag, and I mentioned that a long time ago, because I was better off putting it into projects with higher ROI. Ethereum didn't really push up for about 3 months. Then on top of that, I had to chip away at it anyway to utilize dApps such as Uniswap or other decentralized applications. So if we have that significant dip and we go down anywhere from 30 to 25K on that swing low, that's where I'm going to be loading up on these layer one solutions. I'm going to ride that wave in that narrative that Bitcoin is going to lose its title as top store of value. But do not be mistaken, I'm not going to sell my Bitcoin to buy any one of these, because I think that they're all going to eat away at each other's momentum to a certain extent, and it's not going to fulfill what it's supposed to do, especially when people realize that Ethereum, just in its network effect narrative, isn't going to be fully scalable when a lot of these other platforms are already offering DeFi and things that Ethereum really had backed into a corner that was the only thing that they were doing. Aside from that, I wanted to give just a different perspective as to some of the things I'm looking at when it comes to value, when it comes to really positioning in the market, as to where is the value really going to lie? Where is the value inherently for Bitcoin, especially when it does have these price fluctuations comparatively to something like Ethereum that supposedly can do 500 million other things? You would think that many people in this space would completely abandon Bitcoin if it was just such a hardline logical solution. You wouldn't stay around with an older technology that's antiquated, that wouldn't stack up to anything newer, that could also do a lot more unless it doesn't make sense, not only because you have a bunch of it held previously, which also gives it its foundation of store of value, but the other competitors and roadblocks and scalability issues that any one of these projects could face. So hopefully you found this informational, or at least entertaining a bit, to get away from all this fucking bullshit price action or talking about a goddamn tweet. Aside from that, if you could, please like this video. It does help with the algorithm. I know that people say engagement's been low. I'm like, no, everyone's scared fucking out of their minds, and no one is really looking into more stuff because they're just giving themselves panic attacks. So if you can share this as something more informational, something beneficial to people, I would greatly appreciate it. As always, I am absolutely honored that you come here and join me on this episode of Viva La Coin, and I will catch you guys next time.